Hey guys, this is module 3 of my Forex training, personalized just for you. Today we're going to discuss two types of trading: fundamental analysis, economic news, social and political forces, and the websites to track. So we'll discuss fundamental, and in the next module we'll discuss technical analysis. Right, so basically how to trade fundamentals. Fundamentals, warning, it's big movements, big up and down. The market makers use this as a way of them, moving the market in a particular direction. So you might think the market is going to go this way, and you think it's going to go your direction, and it's going to move up because it's been moving down all this time, and the market just wants to go in the way they want it to go. So don't guess, don't think you know what's going on. Go and do the homework first. Go and find out, what are you trading, what is the economic calendar saying. Go and have a look at which direction it's going. Go and have a look at what is the sentiment. IG have got a sentiment where they talk about the sentiment, which way the market is feeling it's going to go. Go and read up about it. Go, if it's the US, go and read up on the US data. Go and read up on the British pounds data. Go and read up on the euros data. Go and read up on the data and go and understand it first before you just jump in. Okay, so let's quickly have a look. Inflation rate. So buy, the inflation rate is lower. What does that mean? There's a greater demand for the country's goods and services. So if the inflation rate is high, you're going to be selling. So there's a lower demand for the country's goods and services. If the inflation rate is lower, you're going to buy, because that's news. So what is a buy? Good news. What is a sell? Bad news. We go into the interest rate. Interest rate, you buy if the interest rate's higher interest rates. So money flowing into the country with higher interest rates. Sell, lower interest rates, money flowing into the country with lower interest rates. Okay, so what is the money doing? Is the interest rate high? You buy. If the interest rate is low, you're going to sell. GDP. GDP figures is the balance of trade. GDP is known as the gross domestic products, guys. GDP is basically the measurement of all the finished goods and services that a country has generated over a specific time period. GDP figures, for example, the total expenses of a government's consumption and investment, exports and imports equals GDP. That's how it's calculated. So if the GDP is high, you're going to buy. Why? Because it's good news. It means that the exports, which is higher than the imports. Sell, the GDP is lower. Employment figures. Non-farm payroll. Guys, it's once a month. Very, very, very interesting. Very big market mover. And this is where the market movers move the employment wherever they want to be. So you have a look at the last 3 months, and you look at the news, what's going on in the country with COVID and things like that. Are they employing more people? Are they not? Are businesses opening, closing? So employment figures is the measure of the number of paid part or full-time employees, excluding farm workers. So if the employment rate is higher, you buy. If the employment rate is lower, you're going to sell it. How to trade fundamentals. Political stability and economic performance. Forex investors inevitably seek out stable countries with strong economic performance in which to invest their capital. A country with such positive attributes will draw investment funds away from countries perceived to have more political and economic risk. So, for example, right now, the Middle East is not a good place to be investing our money. Afghanistan, they're busy fighting, is not good news. If the Americans make a big mess in Afghanistan, the dollar is going to fall. Just as an example. Political turmoil can cause a loss of confidence in a currency and movement of the capital to the currency of more stable economies. So when economic performance is strong, you buy. When economic performance is weak, we sell. Retail sales, month on month. Change in value of sales at the level. So consumer spending and overall economic activity is what measures the retail sales. So when retail sales are very much up, we buy. Inflation expenditure, quarter on quarter, is released quarterly. Expectation of future inflation can manifest into real inflation, primarily because workers tend to push for higher wages when they believe the prices will rise. So, we move on to the next one. Trade balance. The difference in value between imported and exported goods during the reported month. A positive number indicates that more goods were exported than imported. Unemployment claims. The number of individuals who filed for unemployment insurance fund for the first time. If unemployment claims are high, then you know the non-farm payroll is going to drop. GDP, global dairy trade. It's a leading indicator of the nation's trade balance with other countries because of rising commodity prices, which boosts the export income. Monetary policy provides a valuable insight into the bank's view of economic conditions and inflation of the key factors that will shape the future of the monetary policy and influence the interest rate decision. So who is a big monetary policy statement provider? If you go to America, then you've got a lot of monetary policy statements coming out, and these affect the dollar big time. And if the dollar gets affected, if you looked at the previous module 2, you'll know about basic quote prices. Depending on where USD is, it's a big mover. Manufacturing production, change in the total inflation adjusted value of output produced by manufacturers. Employment change in the number of employed people during the previous month. A job creation is a more leading indicator of consumer spending, which accounts for a majority of overall economic activity. Unemployment rate, percentage of total workforce that is unemployed and actively seeking for employment during the previous month. That's the jobless rate. So a lot of these prelim UOM consumer sentiment, University of Michigan, that's UOM, preliminary level of composite index based on surveyed consumers. You'd find a lot of these are 1 star, maybe 2 stars, whereas the unemployment rate is a 3 star. Have a look at the stars that come through, and that will tell you how important the fundamentals are. Before trading in a day, go and have a look at the economic calendar, go and have a look at how many stars there are, and based on that, you'll know exactly whether you want to be in the trades or out of the trades. Thanks guys for watching this video. We'll be getting on to the module 4 next, and look forward to you joining me. Like and subscribe. Thanks guys. Cheers. Bye.